Let me start my journey from being an underdog after completing my MBA from MIT Institute, Pune, in real estate segment as a sales executive and a marketing consultant. It didn't like the job at all. In today's term, more than 40 to 50% internationally the fund is green.
Oh wow.
Total asset is approximately 150 trillion across world, and out of that right now 50 to 60 trillion dollar is already with the green funds.
Hello, welcome to another episode in our series of podcasts OnTap. Today we have Vivek Suman. He is the managing partner at M&A Experts Advisory. Comes with a 20 plus years of experience in the financial industry. He's a CFA Chartered holder, an award-winning CFO, a TedX speaker, and an author. We'll get to uncover his story today, understand his deep expertise in the fundraising and M&A space. Without further ado, let's dig deeper into this discussion. Vivek, why don't you say hi to our audience and then we'll get started.
Everyone, and good to be here talking to you directly.
So Vivek, before we start, can you walk us through your journey so far? What got you excited about this industry, about this space, and tell us a little bit about the deals that you've done and how you've reached this position of the managing partner of M&A Experts Advisory.
Let me start my journey from being an underdog. That's how I define that into my book as well. So I started my journey from after completing my MBA from MIT Institute, Pune, in real estate segment as a sales executive and a marketing consultant, doing commercial real estate, etc. It didn't like the job at all. I took that job because I had a bachelor degree in civil engineering. And slowly I realized that research is my interest, but not marketing research. Rather, it was financial research. And that's how the moment I got an opportunity in doing consulting and advisory at a consulting firm, a tag org, I jumped into audit and consulting business. It's one of the leading businesses based out of Middle East. So I joined their team. And then I have been poached by Grant Thornton. And that was my change of fate. I joined them within 2 months' time. Of course, it was a difficult journey from the previous company to Grant Thornton, but I took that leap of faith and joined them as a senior financial consultant. And that's how my love for finance has taken me to a path which was quite significant in nature. So, love to explain you further in the journey. Anything else you have at this point in time?
I would want to know more about the kind of sectors that you focus when it comes to M&A and which all sectors do you see great potential in going forward?
So when I started my journey in Grant Thornton, the most of the job which came was from private and public entities like government seeking funds from international funds or a large private company is looking for a development offshore funds. That experience put me in a position where I started handling companies which has exposure all across world. For example, China Development Bank, World Bank, IFC, and I started helping government institutions like airports, road, university, all these institutions. And same time, there was a slew of new development in tolls and making PPP projects. And that was quite an interesting journey, which helped me to become more focused on M&A side, merger and acquisition side, specifically in the area of infrastructure, university, telecoms, and most of the large projects. There my merger and acquisition sits, and I helped a large telecom giant in 2019, to acquire an IoT-based company. I helped oil and gas walkover company, which was Abraj Energy, to go for IPO. So these were a few interesting assignments which pushed me to become an investment banker.
Interesting.
And I started my own investment banking first in Dubai and Muscat, where I joined few of my IIM Bangalore mentors and friends to run their transaction advice services. So I left Grant Thornton in 2019, and I started working as a partner in that firm. And these jobs, which I just mentioned, were the part of that journey.
Okay.
And then India called.
Yeah.
So calling of India happened in 2022. Family was already anyway shifted in 2020 after Corona because we decided it's better to be there with the parents.
Yeah.
So in 2022 in Bangalore, and then I set up my own organization with few of my chartered accountant friends.
Okay.
And now we have, I got that managing director position because I'm the first one in the organization, and we are working with large projects as well here.
Interesting. You also have a special interest in the ESG space lately, and this sector in general is picking up a lot of heat. It's very exciting. A lot of investment avenues are opening up in this particular sector. What kind of trends and patterns have you observed, and how do you think this space is going to evolve?
So ESG space looks new, but actually it started with United Nations looking into this part with, their
SDGs.
absolutely. Of course, that is also a very recent phenomena. In 2015, Sustainable Development Goal came in play.
Yes.
But in 1981, after certain events
Okay.
which has happened in past, world started looking into sustainable practices. So the first word which they have used was used by one of the world entity which was commissioned for looking into three major aspects.
Okay.
I am born in 1980s, so that point in time, ozone layer depletion was quite interesting.
Right.
Everybody was talking about it's depleted, you should not go in sun, etc. And that was one of the topic which United Nations has put in this commission. And the commission name was, a lady was running it, and her name I'm missing. She started and coined this term sustainable development.
Okay.
So it was in 1983 and 1985
Okay.
when actually it took the shape in ESG segment.
Right.
So now the trend has been shifted towards ESG investing, because you see everything starts at the top. The tap and the money which flows in is through the financial sources,
Right.
or the decision maker board of directors who decides where the money should go next.
Right.
And thereby ESG is in today's term more than 40 to 50%. Internationally, the fund is green.
Oh, wow.
Asset under management, total asset is approximately 150 trillion across world.
Correct.
And out of that, right now, 50 to 60 trillion dollar is already with the green funds.
That is
So
amazing.
absolutely, they are looking for something which is sustainable. They are looking for something which is green in nature, helping people to control this climate change, etc. So that money is there. In India also, it's a quite a big phenomena,
Absolutely.
and the growth is exponential.
Exactly.
There is statistics, there is a 300% growth in the job market if you have some kind of certification in ESG, either environmental, social, or governance side of the business.
Okay.
So very big phenomena here. The growth CAGR for last 3 years is 30%, specifically the fund incoming. There are some shocks as well because people have to adjust with that phenomena.
Right.
But it looks like quite greener future,
Right. Right.
if you ask me.
In fact, if you look at some of the government policies that have come out lately, they also emphasize heavily into ESG investments, everything ranging from your EVs to solar. All of these sectors are specifically highlighted, and significant amount of funds are allocated to these sectors even by the government. Why don't you talk to us a little bit about some of the recent transactions which you have done? Maybe, I don't know if you can disclose the names, but maybe without disclosing the names, the nature of the transactions, what kind of due diligence was done, how does the whole process work?
So recent transaction we are helping, I can take 3 examples which we are recently helping actually. So it helped them as well. So one company is in radar making, quite interesting stuff. They are one of the major competition to Chinese market as well as to companies like Tesla. Now in India, there is 2 major problem. One, we have a lot of bikes. So bike doesn't have radar system, right? So you do not know when you will go and bang someone.
Correct.
Or somebody is going to come and bang you as well. So that system is now slowly is adopted in 2-wheelers. Of course, we are using currently Chinese technology there because that's the cheapest mode available. And in 1 lakh, you are getting an electric vehicle or a motorbike. It's very difficult to adjust. So an Indian company has brought a technology which is into this segment, and they are going to compete with China, and they are helping Mercedes in India. They are helping Quest. So a lot of large companies who wants to go to a acceptable and affordable mode of radar system in 4-wheeler or 2-wheeler. So this is one of the assignment. How we did is we have a lot of investor who is looking to invest in the green segment.
Correct.
Coming out of Finland or Middle East. because that's a trend. And this particular radar system helps EV a lot. Yeah, because there is a space to put these kind of systems by reducing a lot of mechanical equipment. And also it gets built into BMS of any, which is a kind of EV system where they operate centralized. And so that is one of the company which we got interest from investor, and we were looking for something like that. And Palab, who is ex Nvidia, ex Sola, he approached us and he shows us that model. We liked it. We trial and tested it with our existing investors, and then we are looking forward to raise for him approximately 4 to 40 million. So quite a large chunk.
Nice.
So that is one. Another one, we are working with a fintech company,
Okay.
which we are taking them to first SME IPO, because we feel companies which are getting into a shape, first they should try with the SME IPO if they
Right.
don't have that command over their revenue. And so we are doing complete strategy for them, that how they should approach,
Right.
because vultures are everywhere, right? So the
Sharks
startup
and vultures.
so we need to make sure that the startup ecosystem is protected along with the investor ecosystem.
Right.
So they are not exposed with the menial frauds,
Yeah.
which is, by the way, it's not only in India, it's across the world, as well as a startup doesn't get, mauled or howled by such kind of vultures. So
Right.
it protects both sides, and that's what the role we play.
Understood. This might be interesting for some of the companies which are potentially looking for an acquisition or a merger someday. What kind of due diligences go behind? How do you identify the right sort of target when it comes to M&A? And how does the whole process work? How should a company or a founder think about it?
So this is quite a critical process. A founder has to understand that the investment fraternity is looking to you not because you have a bright spot in your competition network.
Yeah.
They are also looking to you that, can I get that 5x? And I'm telling you, most of the institutional investor, they do not invest if they don't get 5x. with you.
Okay.
And if you want to establish a fact that you can make a 5x, you need to have those check boxes ticked, which are essential for you to take you there.
Correct.
What happens in exuberance of or hubris of startup founders, they feel that they have the best product. Just you meet any startup. I have met, I don't know, more than 1,000 definitely. Even in Bangalore, it's a hub. So every next person is a founder. Or he is about to go for founding a company. Problem with them is they don't see the competition. They always see that they are in the blue sky market, a blue ocean side of the business. Secondly, they overlook their current operations, which they are running. Anybody who is looking to you, first they will see, do you have that pedigree?
Correct.
And one of the critical pedigree which people look in founder is that, does he have hunger? Does he has that hunger which can take him to this 5 times? And that is why you must have heard that most of the funding happens to IITians or IIMs, because they are built up like that. But that doesn't matter. Eventually, those people also sometimes are very relaxed in their own seats. So this is the first. And then comes your numbers. So your basics has to be very clear, that whatever you are operating has that pedigree that it can take you to that level. This means that you need to be little organized. When anybody starts a company, he forgets a simple bifurcation between him and the company. That's one of the mistakes which any founder makes, because he starts a company with his own money or family's money. So he tend to forget that line.
Correct.
One of the example I will give you, I'm working with a Dehradun-based company. He's a CFA holder as well.
Okay.
And he went to agriculture now. He wants to do something completely different than what he learned. And he wanted my help as a friend as well as an investment banker. The moment I touched his company and I wanted to do due diligence on him before I take the business, first thing I realized that his financial are completely not there. Even though he's a CFA holder, but he didn't maintain that line between him and the company.
Yeah.
Even though I plan to help him, but the process will take much longer then the simple startup. And one more thing, founders need to think how much time he has to get this business funded.
Okay.
And that timeline is very critical. A lot of people in India suffers with that. They expect money is coming. Somebody has committed, even they are getting money.
Correct.
But that time between he has been committed, forget about the due diligence process before, committed and getting is also quite difficult one.
Exactly.
And there also a due diligence happens on different level. So as you asked me, let me give you some steps how we do the due diligence. There are three sides of due diligence. Simple one for founders, which we do and our investors does, is the financial one. Second is, which is we say financial DD, FDD. The second one is commercial DD, where we look into the business model. And third one is legal DD.
Correct.
Now, legal DD, of course, is a specialized stuff, but common checklists are always available with a lot of forums. You can find it. Then comes the commercial. Commercial founder is very, comfortable with. He knows what he's doing.
Yeah.
He knows his market. There also is a small mistake he makes. He does the sample and thinks that his product is can reach to MVP. I'm just saying the seed stage funders, who has not reached to MVP yet. So he did a sample, he sold something to his family and family liked it, loved it. Mom came and appreciated the kid and he thinks it is done business. But the problem is there. That this is one segment. Did you really found out who's your customer? So that finding out the customer in commercial DD is critical.
Correct.
And you need to establish this customer has that pocket as well. Where from he can pay for your premium or whatever segment you are trying to.
Right.
So that's the commercial part, which is also critical. Sometimes people tend to overlook. And the finance DD is hardcore accounting stuff or finance stuff.
Right.
Where people, first of all, I told you that difference between he is a founder and his company is separate than himself is the first line of. And that's why we always ask them to give us your, a document of incorporation, or have you thought about it? What is the structure you are thinking?
Right.
All that need to be clear in the beginning itself. And then comes the later part where we look into their financials, their existing operation. Does that operation matches with the aspiration he has? That also need to be seen. So these are the some key takeaways there. But if you want details, I'm happy to talk about that as well.
Sure. No, I think this is very helpful. And in fact, as you rightly mentioned, right, whether you're a seed stage or you're a large stage company going for just a funding infusion or let's say an M&A, it is always important for you to know that these are some of the elements which will be covered. Obviously, the thoroughness of DD might vary from stage to stage, but all these aspects are equally important, and it's always best to be organized from the beginning.
Indeed.
Because a lot of companies actually suffer a lot at the time of DD. They're not able to do the regular operations because teams are busy providing documents to the potential investor, and that takes away a lot of time from the business. It's always best to be prepared in advance.
I agree with you.
Now that we've looked at this side of the story, I want to also understand when you're making a deal, when you're structuring a deal, how do you ensure that both sides of the deals are smooth, right? Because in a lot of cases, what happens is after M&A, because of cultural issues, because of lack of smooth transition, sometimes these deals also fall apart. So how do you curate and structure the deal carefully so that post the transaction, everything runs smoothly as well?
Three things here. Let me first tell you one story regarding how people does in market nowadays deals and structure those. Founders generally think that they can just call their friend. Everybody is nowadays a friend of another founder, right? So generally it starts from there. He will call the other guy or his friend or his mentor and ask that how to structure this particular deal. I am talking to so-and-so investor and he's ready to put money. What do you think about it?
Right.
That's the biggest mistake he does.
Yeah,
Because he's not even looked at Google. He's relying on somebody who has a different pedigree, different business, definitely different way of operation. Compared to personality also need to be seen. And that is what nowadays still comes down to. The second pointer is the deal structuring has to happen on the founder's level first. That what this guy is expecting from this deal need to be established. Investor has a clear mindset, right? They have their own term sheet they will send you. They want the easiest and simplest way of structuring of the deal,
Right.
where they can exit within a minute they want to. Of course, they are not coming and investing with you to exit within a minute.
Yeah.
But point here is they will have their standard format. Problem lies with the founder, that what kind of personality he carries and what is his aspiration. Is this round of funding which is happening is sufficient enough to take him to that runway which he's looking for? Because that's the third problem in market right now. You will have 24-month runway expectation from an investor,
Right.
but your aspirations are that within 5 months that money will be finished.
Yeah.
That founder need to think on that lines first, because the money comes in pocket and you want to buy everything in the world, right? That's
Yeah.
a normal human tendency, as much as you want to do.
Yeah.
And here is the third pointer, that look into your actual plans, and after you get money, what will be changed there, and put that also in the part of deal structuring.
Okay.
And so it's a thorough process, take little time. Trust me, meeting investor, giving your pitch decks, talking about it is a complete different journey. And the moment you got a commitment and term sheet from the investor, till you get that money in your pocket is completely different. And here, in between is lying your structuring of the deal. Yeah. So you need to understand yourself. You need to understand what is the standard operating procedure which you are trying to ask from your friend.
Correct.
Do a little bit of research and spend little money there with the lawyers. Yeah. Just get a review if you don't have enough money. Just get a review from any lawyers, and there are several forms which will give you. And then go for the third stage, where you make sure that your expectation from that money is matched with what you are planning to do with that money after you get it.
Right. Right. So, Vivek, have you also structured any debt transactions? Can you let us know how those kind of transactions work in your experience?
So I have raised fund of 50 crores for our company LML, where I used to work as a CFO. There we were doing a debt transaction. Initially, we tried to do it with IRR based or invoice based financing, which we were trying to do. Now, my expertise is not there in debt, except the international funds, where we bring and give it to the equity companies or debt companies. But the debt has a different kind of structure, which I get afraid sometime of, that is this guy is right for this kind of fund. We generally go to the debt funds for the purpose of reducing our cost of capital,
Correct.
isn't it? But sometimes in exuberance and hubris of this startup ecosystem, they do not understand that they are taking a capital. It's a risk capital. Even though it's a debt, it's a risk debt capital. You have to treat equally as like your equity.
Correct.
Plus, you have to have a recurring kind of business and cash flow which can maintain it, these kind of funds which you are taking. And that's why it is a little risky. And I prefer a startup to think through that idea, that his cost of capital is not important here. What is important here? Do you have certain recurring business like SaaS business, SaaS business, or you have a business which is on e-commerce? So another company which we had and got funded later for $10 million, one of our subsidiaries, they got it from initially debt. We were talking to some invoice discounting or working capital discounting. Later on, they got it equity as well. Very organized sector. I know few people who are really doing well, but I have not done majority in it.
Yeah, I think with debt, it's very important that businesses understand what is the right timing, right? It's definitely lucrative because the cost is much lower compared to equity. But where a lot of companies need to be careful is understanding the type of capital, especially the tenure, right? You have to do that ALM check when you are taking debt on your books. And most importantly, it's about cash flows. Revenue doesn't matter as much. How much equity you've raised doesn't matter as much, but you need to have enough cash flow so that you can service that debt over the tenure. Obviously, you have to maintain certain debt to equity ratio. You have to maintain an uptick in terms of revenue growth. But end of the day, cash flows is all that matters. Even profit doesn't matter as much as cash
Indeed,
flows.
cash flow. 2 pointers there which we used in our company, and we suggest, even though I don't handle that portfolio, but we tell them to look into 2 things. First, startup tend to ignore IRR versus interest rate. They do not understand difference between these two.
Right.
They need to understand that. However, they should also understand, which is a second pointer, is that what is your cost of capital from equity?
Right.
Do you know that? People tend to think it's 20%, 25%, which is their mistake. And then they will compare the IRR or the interest rate, which will be definitely not justifiable. And they tend to make this mistake often. So what we suggest, first you understand the equity comes at 50%.
Correct.
Because the investor which puts the money in the founder, he is funding him, not the company, because he is funding from different scale. But when debt comes into play, it will have a similar kind of risk profile. So be worried about that.
Yeah, yeah. You've also been CFOs with multiple organizations across your journey, and I'm sure you've seen how that particular space or role has evolved over time. Why don't you help us understand how has CFO as a role evolved over time? What are the skills that are necessary in current times to be relevant and leading large organizations as a CFO?
First of all, my story there. Uh, Generally, CFOs are chartered accountants.
Right.
But that trend has changed. So that is the first change. I am not a chartered accountant. I'm a chartered financial analyst. I comes from different pedigree altogether, and I MBA in completely different segment. Master in business also is not in finance. So point here is, I got this opportunity because of different skills, which is demanded in CFO fraternity of today's. So it's no longer 40-year-old of chartered accountants which are getting produced are applicable in current jobs. So job itself has changed. For example, LML or the previous company where I used to work, National Energy Center, which was acquired by a telecom giant in Middle East, both places, the requirement I have seen has changed drastically. Earlier, responsibility used to be revolve around auditing function. That auditor will come. We need to make sure that our books are clean, smooth, and it gives a confidence to investor.
Correct.
Investor is no longer is looking for the books alone.
Yes.
And here comes the ESG. He is looking that does your company is resilient enough to take care of the risk which lies ahead of you. So initially there was a bifurcation of internal auditor in a company, chief internal auditor you used to appoint, and then CFO got separated.
Right.
It further got evolved. That no longer people are looking for, normal maintenance of the operation. Rather, people are looking for growth of the business.
Correct.
So if you say as a CFO and CEO that I will give you a growth of 5%, which company used to have in past 10 years, even in established companies, matured company, you are not the right candidate as a CFO there. Because uncertainty coming from brittle and VUCA world has changed this dynamic.
Right.
As long as you have a growth mindset, you will be accepted as a CFO in any company. And that's a major change. The growth mindset word are getting often used even in the large companies. And where chartered accountants, of course, that profession is also improving. A lot of changes happened last year. We are seeing the book change, as well as other financial experts are taking that position.
Got it. Understood. Tell us about the largest deal that you've done so far, and what were some of the most exciting and the most challenging parts of that deal?
So let me tell you a listing of an energy company. Now, it didn't happen listing. I was not there on the listing side. I was there helping the company to get equipped and go to that level, which was $500 million listing has happened. So we planned for $500 million. Out of that, 50% came from the IPO. And then before, pre-IPO is the major money churner.
Right.
So, of course, it was a Corona time, so that was another reason why it got delayed. But the challenge which we faced was twofold. One is the Corona creating a problem, and one was before that. The before that is the mindset of the people sitting at the position which has decided to go for IPO. Yeah? That also requires that now no longer you can operate as a family business or as a existing corporate. You need to bring people from outside who can bring a new perspective and match the expectation of market. Whenever you go for IPO or go for funding, you need to match that expectation of investor. Yeah, and here comes the twist. That people think that, no, I am the best judge of, the situation, and I do not need anybody from outside to help me. And that creates the delays. That's the one of the biggest problem which exist in market. And as I told you, you have a runway which is limited.
Correct.
And then you start thinking, okay, it doesn't matter. I will raise the fund at right point in time. It doesn't happen like that. Once you lose the momentum, there is only a glide path which you have to follow.
Yeah.
To change that, you need to again bring some kind of accelerator or intervention to bring it up, which is a much tougher task. So accept certain fact when you are on the journey of becoming bigger, be it large Series B, Series C, Series D or IPO side, accept the fact you need help from outside. Yeah? Because you are changing, you are going into completely different stratosphere now.
Right.
And to push that, you need a kind of, accelerator there. And that is why that was one of the challenge which we have seen, that people are not ready to change so easily and accept outside inputs to understand that. And what happens? Output is the delay. It is not that it will not happen. Vision is there. If founder is determined, he will definitely go to that scale. But the challenge will remain with, can he reach to that scale fast enough?
Okay. And what was the exciting part of this?
Exciting part was the numbers which you play. So you talk about, for example, 5x number, right? I told you any investor look for. When you talk about IPO, it may be 25x when you get listed. Wow. That's the change which keeps you motivated, excited. And when result came, that was the exact number. We planned for 10 to 12 time EBITDA. The result was the listing happened at 27 times.
Nice.
So that's the excitement which you get with such kind of funding situation.
I think that kind of an outcome justifies all the effort that goes behind it.
And that is what important it is for founders.
So, investment banking, as we know, is not an easy field. A lot of people have struggled with long hours, with lack of sleep, for one, don't have any social life or life outside of work. How have you managed to manage your work life along with your life outside work?
Wall Street Wolf. Okay, so social life is there. It's a completely different kind of social life which you live, which is your own team, which you have not... Look, work-life balance cannot be maintained in investment banking. That is accepted fact. And when you are starting with large companies, specifically Big Fours or BCGs, McKinsey, MCBs we say, right? MBB, McKinsey, Boston and BCG. Bain and BCG. So now, if you are working with those, forget about that. Yeah. Work-life balance will not be there. But what you get out of it is a different kind of kick, yeah, which is that you are putting your effort for a purpose which is completely unique. Because these companies mostly work for something really higher purpose than the normal course of business. Correct. And that's what whenever we recruit from, say, auditing firm to consulting side, we talk about this to them. That, boss, you might have just worked for 3 months, the peak period which was happening right now, right? Deadlines, you might have done that. Can you do it daily? Yes. If you can do it daily, come to this side of the business. Everybody wants to shift from audit to consulting, but they are not ready to shift with that baggage which comes with. So you cannot avoid. But trust me, if you have a good team, you definitely get time as well to enjoy, have fun. And that's why socialization come, but it is a different kind of socialization. Definitely not with your parent and your spouses. It's difficult.
So what are your hobbies outside of work?
So that is the biggest question you have asked because I have no answer for it. I used to play cricket, lost it. I lost the interest. I used to watch cricket, that also I lost because you cannot manage it.
Yeah.
With the work pressure you have. So now, right now, my biggest hobby is to go to different places and explore that. Okay. So did some adventurous sports as well with my kids. They forced me to do that, and eventually that is the area I think I want to explore more slowly.
Got it. I think as a founder or as somebody who's building a business, it's very important for anyone to understand finances very well, not just how your balance sheet or P&L should look like, but how do you manage, how do you grow, how do you plan, how do you allocate, how do you raise. All of those things are very, very important and critical to understand. And a founder who understands all this versus a founder who doesn't, it makes a lot of difference. Can you highlight how somebody can develop this financial acumen? What is the easy way to start? What are some of the basic things that somebody should pick up on and build from there?
Founders need to learn finances. Without that, they cannot exist. And the reason is, and here we are talking about startups,
Right.
who wants to raise fund, who wants to make his business triple. One of the good example I will talk, means personally I'm saying, I know they know a lot of finances, but tell me why Baiju is in position why it is today. Yeah, because they are great teachers, both of them, Divya Gokulnath and Vaiju Ravindran, both of them. But they have taken advices only from outside. This is my personal bill because I saw them in different social events as well as they are well connected with my sources. The reason which I see is that basic need to be picked up. You need not to be have a huge acumen in finance and don't claim to have that. These are the two mistakes which people do. So if my firm has raised different kind of structure fund, I will think that this is structure I did it as a founder. It's a mistake. Some advisor has done for you, or this system exists and that's why it happened with you. So accept the fact you cannot become expert. But what you need to know, and basic thing which you are asking me to suggest, which they should learn with, is at least their projection on revenue.
Okay.
Okay. Revenue, they can guess, look, generally people guess that I want to scale from 50 crores to 150 crores in 2 years' time. That's the expectation. The finance which they need to learn here is that how this economics works. So the basic thing they have to start with, and you must have seen in Shark Tanks, and everybody talks about is, tell us your unit economics. Yeah. So start with the revenue, and out of that, how you are going to spend, and still the business is justifiable, or the growth which you are looking is justifiable, need to be understood. So this is the first basic step. Understand the revenue, how the units of that revenue work, that how much of effort you have to put. You need to further break it down. That is the understanding number first. Second, you need to understand there are two parts of businesses in cost side. One is the direct cost and another is indirect. Be careful about indirect one. And don't invest heavily on the indirect one, because those are the one which will haunt you back. So this is the second learning they should do, that differentiate between direct cost and indirect cost. Which one impacts them immediately and which one will impact them in long due course of time.
Right.
For example, rent, as well as, cost of production. These two things you need to understand.
Got it. You've also authored 2 books, From Underdog to Unicorn and ESG and Sustainable Investing.
Right.
What was your motivation to write these books and what is the messaging?
So as I was setting up my organization, I saw that a lot of people doesn't need investment banker. A startup, neither they can afford and nor they can take that pressure of investment bank. Investor is a pressure, everybody knows. But investment banker pressure is additional pressure, right? They will do the pre-due diligence. They will do the hard work with them to prepare them for those investors. It's equivalent.
Right.
So once I understood this, and I was facing this problem in Bangalore specifically, where a startup founder used to think that I know everything. What else you are going to bring it in? I know few investor, I'm meeting him every day. Then I used to ask him, why didn't you crack it? You are meeting him every day. Why didn't you get that money in your pocket? Yes. And then he will start crying. And then the 1,000 cries will come. That was my first motivation to write a book. Okay. Yeah, I decided that rather than giving them the reports and guidelines and what to follow, let me put everything in a book that anybody can get benefited with. So I wrote it in simple story terms, where I also talked about my journey and what I have seen. I have not become unicorn, and hopefully I will become one day. But it's a long journey to be done. Point here is I have saw a lot of businesses going to that route, which are there in 1,000, 5,000 to 20,000 rupees book. I thought bring those in a simple language for the founders or a startup to just read what are the processes are involved, how that works, the due diligence, the finance model. What is the model? People think putting numbers in Excel is financial model.
Yeah.
Crap. The moment it goes to the investor, he says that this is not the right guy to fund. This is the first mistake they do. And they think that they have done a great job. They ask his friend, he put some numbers for him. So what is required in financial model need to be understood. What is required for you to be ready for due diligence need to be understood. What you need to think about term sheet need to be understood. Not everything I have covered there, but I try to cover in simple language with certain story like Uber, all the big guys who has reached to the unicorn level, Airbnb, as well as my previous company where I was CFO even. I helped them from the beginning. So they came to us in Grant Thornton as a pass out student who just got award of his IP work, whatever he did in graduation. He didn't have the money to pay for Grant Thornton fees at that point in time. But he came with a commitment at that point in time that you help me right now. I know you don't have helping schemes. Grant Thornton doesn't have anything.
Yeah.
They have a minimum threshold. They will not work beyond it.
Yeah.
So we negotiated at my partner level at that point in time and convinced him, let's help him. It's a government stuff, first of all. So it gives us that limelight. He's already got awards. And we started helping him 2016. 2021 when he got the acquisition done of one of his business, not full business, he got given it to the acquirer. He gave him only one line of business. He became unicorn. Oh, wow. So that was the journey I have documented and put in a book. So read. ESG investing happens, completely different story is there. Because I realized that international fund, which wants to put money in India is not finding a way. Specifically directly to the NBFCs or etc. because of the governance issue. Correct. Let's put that very clearly. An ESG fund, G is the government there.
Correct.
Full form, environment, social governance. So how a ESG fund can put money here? And that challenge, I realized that it is not a simple challenge. The challenge is there is no awareness even. People do not think about those kind of fund. Even the government has announced 10,000 crore last year.
Yeah.
This year budget also they have similar kind of with solar power, housing solar power, where everybody will get 75,000. Now where from that money will come?
Yeah.
It has to come from a route which is green. Yeah, because it's easily available and the cost of capital is very, very low. Okay. So you can also have a play, all the people who are going to invest. So solar farms, etc., they definitely need these kind of fund. So we thought, why not to make aware? And CFA, I'm quite associated with CFA Society Bangalore as well as Delhi. They have some programs in it where 40,000 people are learning right now. Okay. And only 3-year-old program. So you can understand how the impactful that program is. So I decided that let's make investment fraternity, at least in India, aware about it and let them choose such kind of programs so they can skill themselves. And eventually it is working out. And first it started as awareness. Then we started doing some transition program for companies that you are non-compliant, you become compliant and get that fund. So one company right now we are helping in utility where we are helping them to go for a ESG fund. So we are preparing them with all the ESG factors, making them compliant, ticked off, and it's quite a large company. So they need to pick up. And the larger the company, faster they should pick up ESG compliances.
Okay.
So that's a consulting area which we are honing a skill.
Nice.
And that is why I have written that book. That fundamental, again, I need not to teach anyone. They should know. And that book is 101 on ESG investing.
Got it. No, very interesting. Thanks a lot for spending time with us today, Vivek. Before we wrap up, I have one last question, which I ask all my guests. It's my most favorite question. Which book are you reading and what is your normal genre of interest?
So genre of interest mostly in finance. That's what I work with. And I like that. Books where new concepts are talked about, as well as in fraud, what is happening. That's the area I like. Actually, I'm right now not reading a book. What I do is I decide.
Are you writing a new book?
No, I'm not writing right now. But I decide that whether I'm reading or I'm doing binge watching. Yeah, I cannot afford binge watching, but I do a sequential watching. So Ozark is a series which I'm doing. Very interesting stuff. Everybody should watch. It's quite a good drama as well. But it has a lot of learning that how to not go into black money and white money. So that's what I'm doing currently.
Great. Thanks a lot, Vivek. It was lovely interacting with you today. I'm sure all of us have picked up interesting insights from this discussion, and we look forward to meeting with you again.
Pleasure is mine. Thank you.